Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on CMG SKX NKE and TWTR. And again, we're looking at this list from a long-term bearish perspective. We call this our resident bear list because of the weekly longer-term downtrends. So that means when we see upside, we look for resistance levels to be looking for a longer-term bearish entry. And we know CMG is right on the verge of a key resistance level. We'll look at that on the weekly time frame in just a moment. But here, clearly, we're rejecting and back-testing and rejecting from this 200-day moving average resistance, 412.86. This could be normal healthy consolidation. As you can see, the big-time breakout, the decreasing bear volume, and that contained consolidation at this point. We did start filling this gap. We would have to break 407.80 on Tuesday for the bears to be a bit more confident in continuing to fill this gap. If we close over the 200-day moving average resistance, we're going to be looking back up at 420.23, the high of this move at this point. So on the weekly time frame, we've been following CMG very long time because of this lower high, lower low pattern, very clearly favoring the bears pretty much all of 2016. But we're very close to changing that. I'm looking at this lower high right here of 419.30, and although we broke above it, we could not close above it. The high close was 411.80, and we closed about $1 below that. So there is still some resistance there. I'm not convinced just yet that the bulls are going to turn this trend around. Nice volume for those bulls, nice increase from one week to the next. And at this point, we're watching the 50-week moving average resistance. That's going to be approaching the low 420s. And you can see how tight these Bollinger Bands are getting. So the bulls are very close to turning this trend around, which would have us looking for a move back to the upper 400s. But as of right now, not ready for that to be the case just yet. And we're still watching that 200-day moving average resistance as we enter this coming week. SKX was highlighting the bearish entry from the upper Bollinger Band resistance. 25.91 was that level. We got within 5 cents from that point on Friday, and then we pulled back a bit. So we have a bit of a double top, 25.86, 25.86, two of the past 4 days. So a bearish day, and if we see a break of 24.91, the low from Thursday, we will know that's a nice bearish entry, and we will be looking for further pullback back down to where this support was built in the mid $24 range. An exit signal, now we have this double top. A clear exit for the bear trade would be 25.86 breaking. We have that upper Bollinger Band getting tight. It's going to require a high volume breakout day for the bulls to get over that upper Bollinger Band and see further movement to the upside, which is why I like a bearish entry from that level. On the weekly time frame, the bulls recovered after an indecisive week previously 2 weeks ago. So we need to keep that in mind. The weekly chart does look okay for the bulls right now. Obviously, the longer term downtrend is still intact, but the bulls consolidated healthily, if that's a word, after this breakout back in November. So the weekly time frame, need to be cautious because it could still favor the bulls, but the daily time frame, we have a clear resistance level that the bulls would have to get over to turn things around. NKE, there's the bullish follow through. So a pullback from the breakout, bullish reversal candlestick, confirmed in a big way and a close at the high of the day. So as I was saying in the previous videos, if you've been watching these, now we're going to be looking for a bearish entry in the upper $53 range, and we're going to be top fishing with resistance of 54.09. That's the key level of resistance for the bulls to continue with higher highs, and we will know to exit as a bear if the bulls do get that higher high. We do have nice higher lows here on the daily time frame, which is certainly favoring the bulls. There's a gap down here at 51.33 we're going to keep an eye on, but this candlestick on Friday definitely indicates some more bullish upside is coming. So that's why we want to be patient and allow for perhaps another 75 cents to $1 to the upside before we look for that bearish entry. The weekly time frame back tested and held that middle Bollinger Band. So it was resistance for 5 weeks, rejecting. It became support, and then we back tested and held that level. So we're going to be keeping a close eye on the weekly middle Bollinger Band going forward. As long as it is support, we will look for this oversold bounce to play out. And as of right now, that middle Bollinger Band is going to continue to descend. And I always count back. If I'm curious to know when a moving average is going to level out or begin ascending, I just count back 2, 4, 6. So the 20th week is right here. So every week that goes by, we're going to drop one of these weeks to factor in the moving average. And I would say about another month before we begin leveling out and ascending on that middle Bollinger Band. So clear resistance in the upper $54 range. If we were to get a break and continuation with higher highs, we would be looking then at the next resistance up at 55 psychological, where the 50-week moving average resistance will be waiting. Checking in on Twitter on the daily time frame, rejecting from the 200-day moving average resistance. So that is very clearly the resistance level to be watching, as we have now rejected 4 of the last 5 days. Saw some nice follow through from this bullish candle on Thursday, but the bulls couldn't hold the gains at all, and we closed down near the low of the day. So it's all about that 200-day moving average. Still a gap to fill at 1787, and the weekly time frame is rejecting from the 50-week moving average resistance 2 weeks in a row. That level is 1748. So ideally would have liked a bearish entry up here at this gap fill. Looks like this 200-day moving average is some pretty tough resistance. And if we pull back down towards 1696, we know it is likely, if we break that support, that we're heading down to 16 psychological, or I should say 1621 and 1616, the lows that we've hit recently. So it's all about the bulls' ability to get over that 200-day moving average, 1757 this coming week. I appreciate you watching. We're going to keep a close eye on a lot of these names. CMG has had some nice trading action before things started tightening up the past 2 days. You can see the volume dropping off, but we're expecting a break in that tightening range this coming week. Thanks for watching. Have a great long weekend, and we'll see you next week.